my investment philosophy I don't stress about putting money into real estate or putting money into my business, because I'm making an investment that should have a positive return and continue to help me build wealth in my business and my life.
What's going on, everybody? Thank you so much for tuning in to the REI Allies podcast. My name is Ahmad Soughar. I am a licensed real estate agent here in the Valley. I'm also a wholesaler and to do a lot of fix and flips, trying to be a jack of all trades. But we're not here to talk about me, and this is my partner.
What's up? It's Rich Wonders, BPY wholesaler, acquisition trainer, innovation specialist. Me and Ahmad started REI Allies just as a community of other real estate entrepreneurs. We want to just inspire people. We want to share resources, knowledge, bring on cool people that have inspired us and that are doing big things, and kind of just give everybody kind of like just like an inside look and a peep into conversations that they may not, normally be privy to, right?
Absolutely.
People just starting out. So, super excited. So our guest today is my man, J.R. Piper. And a lot of you guys may know him. If you're doing any real estate deals in Arizona, you probably ran across him. He's been on Real Estate Disruptors podcast. This guy is a fix and flipper, wholesaler, direct mail Jedi, landlord. He flies under the radar, and he's a very humble dude. So, he actually got me inspired in my journey when I saw him traveling the world doing cool stuff on Facebook. And he was a childhood friend of mine from elementary school. So I'm super excited to have you on here, my man. Thank you for taking time out of your schedule for this, bro. And we just kind of want to kick things off. So we're going to go into a little bit on his story, like kind of growing up here in Phoenix and kind of how he got started in real estate.
Cool. Thanks for having me, guys.
For sure, dude.
I'm glad
Absolutely.
to be here. I'm a Phoenix native. I grew up, born and raised in Phoenix, and I had always didn't have anyone in my life in real estate, early on, but always had an interest in real estate. And like most of us, didn't know high school, didn't know what I wanted to do with my life. After high school, really got myself into a lot of trouble. Got into drugs, got in the wrong crowds, got myself into kind of some dark situations. And long story short, I didn't have any sort of career path, and I was really running in the wrong circles and going down kind of a dangerous path. I don't know if you realize this, but
yeah, we crossed paths a couple times during that. It was probably a blur for both of us, but I remember running and gunning.
And so I don't know if you know this, but at 22, I was actually homeless for a little while. Because that's where my substance abuse and my drug addiction took me. Very dark place, dark time in my life. Family basically disowned me, didn't want anything to do with me, and wasn't allowing me in their home anymore with good reason. I was a total mess, and I was stealing from them, and bringing really dangerous people around and just doing all kinds of nonsense. I got arrested a lot of times. Never spent a lot of time in jail, but I did get arrested a lot of times, and just took this is the ends of drug addiction are always the same: jails, institution, and death. And I was definitely headed down that path. So at 22, I was homeless, and it took me years of struggling and suffering, but eventually at 22, got my act together, got myself clean, and started, trying to figure out what I wanted to do with my life. In a lot of ways, it was like the beginning of a new life for me when I got clean at 22, and that was in 2007. Wow. And so in 2007, I started a pool business, and I think I always growing up, always had a very entrepreneurial mind and spirit. My dad was a business owner when I was growing up, and even though my parents encouraged me to go to college and get a good job and get benefits and just take that traditional route, that never appealed to me. It was never something that I wanted to do. I wanted to work for myself and control my own destiny and be able to not have to answer to anyone, but also to have the freedom to do what I wanted to do when I wanted to do it, and to live whatever type of life I wanted to have, And I knew that working a 9 to 5, I wasn't gonna have that lifestyle. I needed to create that for myself. And so I started this pool business at 22, and I actually it wasn't a huge success, but it was a successful small business for my age and experience and just situation in life. I was doing well. I was earning a decent living from it, and basically rebuilding my life from nothing at that point. And, because of wreckage from my past, I had a suspended driver's license, and here's the irony of me driving around in my pickup truck to clean pools all day all over Phoenix. Wow. And I kept getting pulled over. Like, even if I wasn't doing anything wrong, the cop would run my plate and see that I was suspended, and they would stop me. And each time I got pulled over, they added an additional year on the suspension. So long story short, my suspended driver's license was extended to 5 years. And I had to give up that business. And, I ran that business for a couple of years and built up my clientele base, and ultimately made the really difficult decision to sell that business, which I did not want to do. I was actually devastated because I felt like something that I had worked so hard to create was being taken from me. I was being forced to basically forfeit it, But I sold the business. I made decent money when I sold it, more money than I had ever had, as a 24-year-old kid or whatever. At that point, I took some time off and just figured out what my next move was. I went and I worked and by the way, the lesson in that is that sometimes in life, I think things don't go our way, and it can seem like an incredible tragedy. But in many cases, it's just the universe's way of guiding you down the proper path, So like, I always try and remember that when something bad happens in my life, to not get discouraged, because sometimes it's just the universe's way of like guiding me to where I'm supposed to be, if that's not the path I'm supposed to be on. But anyway, I went and worked a corporate job in behavioral health for 3 or 4 years after that. And I was really good at that job, and I did well in my role there. And I was, I grew within the company. But in 2000, after the real estate crash, I had a couple of buddies that got into real estate, and they were like buying and selling houses out of the trustee sales at a very high level. And in 2011, they approached me and asked me if I wanted to start working with them and basically helping to manage construction and deal with property management and do just some of the lower level stuff that they didn't want to do or didn't have time to do. And I was like fascinated by real estate, so I was excited to have this opportunity, even though I knew absolutely nothing about real estate.
Yeah.
And so I said yes, of course. And this is interesting. I hear people that want to get into real estate, and I think sometimes people underestimate how much work it can take to get involved in making your dream happen or get involved in starting a business. All right. Picture this. I was working in a detox facility in Mesa. Okay. I was working a night shift, and I was, during the day, I was staying up all night working the night shift in this detox facility, and that's my full-time job. During the day, I was driving construction projects and working for these guys, go home, sleep a couple hours, go back to work the night shift during the day, and sometimes at night, I'd be in the back office studying real estate when it wasn't busy. So I was literally 24 hours a day working on this side hustle. Every second of my free time was devoted to just like learning and growing and trying to figure this thing out. And these guys paid me what I would say was next to nothing for what I was doing for them, okay? And I always tell people, if I could go back in time and do it again, I would do it for free. Because I learned in a year what it would have taken me a decade to figure out on my own. I mean, we probably bought 30 houses that first year, and I was managing construction and dealing with tenants and property management and acquisition of real estate and disposition in some cases. And it was like, I knew nothing. And I made a ton of mistakes on someone else's dime. And But the amount of experience I got working for those guys was invaluable. And I was friends with these guys, but they weren't doing me any favors. They were actually really hard on me. It was a mutually beneficial arrangement because of the value that I brought to the situation. Right. I've had a lot of people say, you were so lucky you had someone. I was incredibly fortunate that I had someone at that level, at that stage in my journey to help me get involved in real estate. But I added a ton of value to their business, and I worked my ass off, You
were smart enough to see the opportunity
100%.
Buried in there,
yeah.
And to persevere through because a lot of people, like, they want to start out and be the big shot, like, right away.
Yeah.
You know what I mean? It'd be hard to humble yourself, especially if you work in the night shift. Like, you had every excuse not to do that. Like, shit, they're not paying me anything. I'm doing all the stuff they don't want to do.
Yeah.
But that was, like, literally, like, the perfect training for like what you're
It's
doing
a tough
now.
pill to swallow for sure. I mean, when I got into the real estate business, I had the same experience. I wanted to change my boat to a bigger boat so that I can propel forward and move faster. And I think that's the key in learning is you can do it on your own and you can, sit back and study all you want. And all this information is on Google and all over the internet. Even back in 2011, 12, 13, like there was a lot of information out there. Seminars were big as well, and people were still doing what they do today. But you had the opportunity of just putting your boat, hanging it with another boat and propelling forward, and that's key.
Yeah, and the reality is, at that time, like that opportunity literally fell into my lap. Like I wasn't out looking for it. I didn't approach them and say, how can I get involved? I just happened to be in the car with them one day, and one of them was buying a bunch of houses that trustees sell, and he was like, man, I want to buy more houses, but I don't want to deal with contractors, and I don't want to deal with tenants or property managers. I just don't have fun, because he was running an internet marketing business where he was making all this cash, and he wanted to park it in real estate. So I just happened to be sitting there with them when they were having this conversation, trying to figure out a solution. And they both kind of just stopped talking and looked at me and said, do you want to manage that for us? And he'll buy a bunch of houses and you just help with all the other stuff. And I was like, yeah, that sounds cool. I'll do that. So it was like, it just fell into my lap. Right place, right time. Relationships, right? Yeah, I had a relationship with these guys, so relationships are key. But the reality, like you say, recognizing that opportunity, because then when it came time to negotiate, okay, what am I getting paid? It would have been very easy for me to say, well, that's not reason. Like I was getting paid like nothing. And it was like, I was just excited for the opportunity to do something outside of my normal job that potentially could lead to some sort of future business or more opportunities in the future. Like I didn't know what it looked like, but I just knew that I wanted to be in real estate. These guys were in it.
How old were you at this time?
I was probably 20.
So you were 22, and then
I guess I was 26.
Later,
I was 26.
Yeah.
So anyway, I got involved with what they were doing. I fell in love with it. Like it was fun. That's what kept me going. I mean, I was sleeping 2 hours a night. Like I literally was working a night shift and then driving properties all day and getting a little bit of sleep before heading back to my job. So it was like, that's what kept me going. It was exhilarating and it was fun and it was new and exciting, and I saw potential of what it could be someday, right? Like I saw some sort of future opportunity. And so I decided at that point I wanted to transition into real estate full time. And so I signed up for real estate school. I started, as if I wasn't doing enough at the time, I started going to real estate classes. Yeah. And then in that back office, while I was working the night shift, I was studying my real estate notes and stuff. And so I was working a full-time job, going to real estate school, studying real estate, driving properties and working for these guys and with these guys in the daytime. And my plan, right, was to gradually transition out of that job as I started doing traditional like retail deals as a realtor, in addition to working for those guys, in their businesses, to build up my income stream from real estate independently from what I was already doing, right? And then as I was able to match my income from my W-2 job, I was going to quit the W-2 job and transition into real estate full time. And in a perfect world, that sounds great, right? So a lot of people have asked me this question over the years, like if I'm working a full-time job, like at what point do you quit the job and go into real estate full-time? And that's a difficult subject to tackle because it's different for every person, and it depends a lot on risk tolerance and, someone's discipline and motivation levels and like just how hard they're going to go once they get into the business and what opportunities they have. And I would never want to tell someone quit your day job and go into real estate full time and then they fail, because it's a sink or swim business, right. And if they fail, then like I'm gonna feel bad that I told them to quit their job. Now they can't feed their family, For me, I thought this slow transition, because I'm pretty conservative in general, I thought this would be like the safest way to go about this. And it didn't work out the way I planned. What happened was there was a weird incident at work where I didn't do anything wrong, but I was a manager on duty and wrong place, wrong time. Something went down. I didn't necessarily intervene and stop it, and it ended up costing me my job, and I got fired way earlier than I had planned. And I remember it was, for a moment, it was terrifying, and I thought, wow, this is like, not what was supposed to happen. And now here I am, I gotta like figure out this real estate thing. But then I realized like, no, you know what? I'm good. I'm gonna make this work. I've already got my foot in the door in one space, and now I'm studying, and I'm just gonna continue that path, and I'm gonna make it work. I'm gonna figure it out. And it was the best thing that ever happened to me, getting fired from that job, because, you know, I think it accelerated that path into real estate. I might have been at that job for another 6 months or a year or 3 years. I might have never left, because I might have never matched the income or just felt confident enough in myself to go out on my own, right? And so it kind of forced me into full-time real estate, sink or swim. Okay, now I have to figure this out and succeed or I die. Like there was no third option, right? And so I went full-time into real estate. I worked with those same guys. They were a great resource and a mentor for me early on. I worked with them. I started brokering deals for them once I got licensed, and I was doing deals for them on the MLS, representing them as a buyer and seller agent. I started working with traditional buyers and sellers and like growing my real estate income just as a solo agent. And then it was like, you know, these guys were buying and selling homes out of trustee sale, and they were like, any houses that they couldn't sell, they were just keeping as rentals. And I was doing the math. It was like, if you bought a house in 2012, you know, for $30 or $40 or $50,000, there's a good chance the house is going to be worth more than that someday. Like we were literally at the bottom of the market in 2012. And of course, you know, hindsight's 2020, but I didn't know how far up it would go or what that would look like in the future. But I just knew that even if the market didn't go up, as long as you could rent the house out for more than what you were paying on hard money or mortgage or whatever, you were okay. You were always going to be safe with that house. And my buddy was just like accumulating houses and doing exactly that. And his bet was that they would go up in value and he would refinance them all and retire by 30. Like that was his master plan, right? And so I adopted kind of that same philosophy that true wealth is created not by just making a bunch of money, but by owning a lot of assets that continue to pay you passively, whether you're working or sitting on a beach. You know what I mean? And so that was my goal, like from day one, was to start figuring out how to generate as much passive income as I possibly could. Because like 50 Cent says, you're not making money until you're making money while you sleep, right? So that was always my goal, was I want to make money while I sleep, whether I'm in the office or not. And so I saved up money. Once I started making some money in real estate and doing well, I had a good first year as a solo agent, right? And I didn't have a lot of money, but I was making money. And I started saving up some money, and I bought my first rental property in 2013. I bought it at the trustee sale. I paid $53,500 for it.
I knew you were going to drop some really low number.
It was a property in Maryville.
Let's go.
51st Avenue in Thomas. Okay. Now that property I actually sold like a year or two ago for $205. Okay, nice. To a traditional buyer. It was kind of a rough neighborhood, and I just over the years have always had issues with that house, burglaries and people breaking in when it's vacant. Yeah, and it was a rough pocket in Maryville. But anyway, I bought that house in 2013 for $53,500. I got a hard money loan on it. And I basically, every cent that I had in my bank account went into that house. I had, I think, $10,000 or $20,000 saved up for the down payment, and I had like $12,000 set aside for the renovation. And that was it. That was all the liquid that I had, liquid cash in the bank. And I remember the day that I bought that property, when I signed the paperwork, I said to the guy, my buddy, I said, well, now I'm broke. And he said something to me that I've never forgotten. He said, actually, JR, now you're richer than you've ever been. And for me, that was such an interesting change in perspective, because it awakened me to the difference between how most people think and how an investor thinks. You know, when I put money into a cash flowing asset, I am not spending money. When I put money into marketing, I am not spending money. When I hire someone and pay them a salary, I am not spending money. I am making an investment that will or should have a positive return on that investment. Right. And when you think about it that way, it gets a lot easier to cut the check, because it's a scary thing to give up all the liquid cash that you have on this leap of faith that this thing is going to work out and it's going to make money, right? And it's going to make me wealthier and add zeros to my balance sheet. We really don't know when we cut the check, but it should if it works out properly. And so, my investment philosophy I don't stress about putting money into real estate or putting money into my business, because I'm making an investment that should have a positive return and continue to help me build wealth in my business and my life. So that was the first house that I bought. I did my first fix and flip in 2014. I think I started wholesaling properties and figured out the whole process of assigning contracts in 2015. And at that time I was still, the bulk of my business was still working as a traditional agent. And I was doing the investment stuff on the side and just trying to build a portfolio and a nest egg, almost like a side hustle again, just strictly investment based on the side. But my full-time job at the time was working as a realtor for buyers and sellers. And while I enjoyed that and the money was really good, I didn't love it. And at the end of the day, I was still working for someone else. I was working for the person I was listing a property for, right, or the buyer that I was showing houses to, which drove me nuts, And I still just knew that owning assets was ultimately what was going to create true financial freedom in my life. And so my goal and my philosophy, as I was learning all these things and implementing them and continue to evolve in the business, was to use wholesaling and my real estate license and my income as a catalyst for investments, right? So I was just going to make as much cash as I could, flipping properties, wholesaling properties, and generating commission income, just strictly to invest in assets so that I could all that liquid cash, I just want to keep pumping it into assets that were going to pay me. And I knew that eventually one day it would start to pay off, because in the beginning it really doesn't. When you have a house that rents for $800 a month, that Maryville house, I bought it for $53,500. I put $12,000 into it. I had a hard money loan payment, and I think I rented it for $750. I wasn't getting rich off of that house,
right.
It was I was netting a few $100s a month.
And you'd been busting your ass to get that money that you put down on it.
Yeah.
That was earned income of
exactly
driving people to open houses.
It's a year. That was
right.
a year. It was 6 months or a year of income that I put into this one house. Yeah. So It was okay, well, I just got to do that again. Right. And so rule number one for me in generating wealth and creating financial freedom is learning to live below my means. I've always been an advocate for that. And I still to this day, I live well below my means for the income that I have and my net worth. Right. So I tell people, I have friends that the second they started making six figures, they bought, a BMW and a Rolex and they're, and they're just spending money as if they're wealthy. And it's I get that you want to celebrate the success that you have, and you should be proud that you're making the kind of money that you make. That's great. But my advice to everyone, especially when you're starting out, is just take some time and make sacrifices in the beginning, right? Don't go out and buy the expensive shoes and the expensive house and the expensive car and the fancy watch. And there will be a time and a place for all that stuff if that's what you like, right? Early on, sacrifice, live below your means so that there is money left over with the very intentional purpose of investing into assets. And as you invest that money, little by little, your income will grow, your passive income will grow, and someday you will be able to buy those things that you want, the car, the watch, the whatever, right? And it won't affect you financially at all. Mm-hmm. So for me, that's my rule is if I go to buy something, an expensive item, and it affects my balance sheet in a negative way, or it puts a dent in my liquidity that's really noticeable or causes me any kind of stress, I don't do it. Right? I buy things, I don't finance luxury, and I buy things that I want, but only if it's no big deal to cut the check, right? Mm-hmm. And that's just a whole different conversation probably. But anyway, so I was still working at this time as a full-time agent and doing the investment stuff on the side. And I think it was either 2015 or 2016, I think it was 2016. I drew a line in the sand and I said, just like I had to take that leap of faith when I decided to leave my job, right? And I got pushed off the edge. I didn't actually leave the job on my own free will. But just like I would have had to take that leap of faith, and I was preparing to do so. I was at this point where I was like, man, I'm making really good money as an agent, and I want to keep the cash cow alive, but I think the potential over here is greater, and it's what I really want to be doing. And so I did take that leap of faith. I drew a line in the sand. I told all the buyers or sellers that I had in my pipeline that like I wasn't yet working with, like, I'm no longer representing anyone but myself. I don't care if it's $1 million listing, I'm referring it out. And I told I had buyers like in line, and I said, sorry, talk to this guy. He can help you out.
Wow.
And I just focused all my time and energy on wholesaling real estate, acquiring rentals, and flipping properties. And I think that year, like I had probably made, I don't know, $250,000 as an agent in commissions. Wow. The next year I made $1 million.
Wow.
So it paid off. It paid off in a big way. And I could have always gone back to being an agent if it didn't work out, right? But it instantly paid off because I took that leap of faith and I focused on what I felt was going to be more profitable. Plus the energy behind it was so huge. I was so excited to be doing what I wanted to do, and I was so passionate about it. And anyway, so that's a long-winded backstory on how I got to where I'm at. But since then, my business has continued to grow and evolve. Today, what it looks like is I've got a rental portfolio all over Maricopa County of different types of properties: single family, houses, condos, townhomes. I own multifamily, small multifamily apartment buildings. I own some commercial stuff. We're in beautiful downtown Phoenix. I was just telling these guys right before we started here, I've got several buildings right around here that I'm really proud of on Grand Ave and Roosevelt Row, some commercial properties that we've acquired over the years. And then I've got a fix and flip company. I try and avoid doing a lot of fix and flips because I don't like managing construction. It's like brain damage for me dealing with contractors.
It's ironic since you started.
Right.
That's how you started.
That's where I started. Yeah. No, but I don't love managing construction, right. And flipping properties takes a lot more time, energy, capital, and stress.
That's the hardest part. Is the contractors. People
don't realize it. Yeah. So I try and avoid doing a ton of fix and flips, but just in my line of work, I do a lot of remodels and flips, just as a byproduct of what I do. I do a lot of wholesales. We were talking about that earlier. I love the wholesale model where I just buy something and list it on the MLS without fixing it up or doing anything. I wholesale and assign a ton of deals, flip the contracts. I also lend hard money, and I do seller finance notes, which I've just started doing in the last year. The mathematics on creating debt. In other words, when I buy a property, rather than keeping it and renting it out, I will sell it to an owner-occupant, and I will finance the debt to them. So there's no bank involved. They will give me a down payment, and they will make payments to me instead of a bank. And the mathematics on it is just insane. It's like way bigger cash flow than the rental properties. Plus I don't have to remodel them. I sell those as is. And so it's just another strategy in the disposition, next to just flipping it or keeping it as a rental, another way to generate passive income. And so, but I'm blessed, man. I love this business, and I'm having fun doing it.
Amazing, man. Yeah. What a journey.
Yeah.
What a turnaround. And today, how old are you?
37.
37. Mm-hmm. So in the course of, about 11 years, incredible, man. And it's funny that you say that your retail journey and how you switched to kind of that investment side. When I got into real estate, I was also a real estate agent. I am a real estate agent today, and I'm still practicing, unfortunately, unlike you. But I've realized that there is a lot of power for a real estate agent who understands the investment side. And I wanted to be that realtor that people kind of went to whether they wanted to buy their first flip or they wanted to build their wealth through real estate. And I was really pushing that. I was with a team. I'm not sure if you know Lauren Rosen, the Rosen team. So I was a part of their team, and she did a lot of fix and flips. And so I got to see her kind of doing some fix and flips. I'd go walk projects with her. I'd go and take some YouTube video, Facebook videos, do some lives. open houses on the listings that they were finished. She was doing like 35 to 40 flips a year. So she was doing high level. And so I saved up enough money, literally down to the dollar that I had saved up, and I bought my first property. I went in and I made earnest money hard on that deal because I believed it was such a good deal, and it was in Mesa, and I just went in and did it, and it felt very liberating, and it gave me that boost of confidence to say, hey, you know what you're doing, keep doing more of that. And so I think the hardest part for people who make money, because everybody gets rich doing something, whether it's real estate or in any type of other field, but truly people build their wealth through real estate. And real estate is that vehicle where you're able to leverage the capital that you do generate to turn the $50,000 to $300,000. But just because you've accumulated that debt doesn't mean that now you're $250,000 setback. No, you're actually increased your net worth because that asset is producing you cash flow, and that's the most important. I believe that back in the day, people said buy real estate and wait, right? Which is a good model. It works to some extent, but still you have to calculate the numbers right. But it's more important for you to cash flow, right? To cash flow and make sure you're generating that. If it appreciates, great. If it doesn't matter. I'm still appreciating. I'm still cash flowing. But a lot of people struggle with that, and I think it has to do a lot, because I've had a lot of conversations about this. It has to do a lot with the way that our society is structured today, of how instantly gratifying it is to achieve things, right? And now a lot of people don't want to work all year, make 50, 60,000, 100,000, and then take it and put it in a property and make 100, 200,000, 200K, $200, $300 a month from, right? They don't see it that way. But for you, it's like, hey, the market is right here. There's very likely, that this could continue to go up. But a big catalyst for that is like rent prices really didn't change in 08, 07 coming out of that, right? And today, I mean, a lot of people are like kind of skeptical about the market, and they feel a little bit, they think the market is going to crash. But we know that hedge funds are buying single-family homes. We know that a lot of institutional buyers are buying single-family homes, and they're buying multifamily, and that hasn't stopped. It's actually increased more than anything because people are selling their properties and going to rent. And if the market does change, then people would sell their home or give up their home and go rent. So I'm curious, what are your thoughts on, because you've seen the market change quite a bit, especially in value, real estate value. How has that change your perspective on real estate, and how has it changed for you personally when it comes to leveraging your own portfolio?
So I got into real estate after the big crash of 08, obviously. And so I basically entered real estate when it was bottoming out. And so I've seen it do nothing but this over the last decade, okay? And so I haven't been through a market crash, or I haven't seen that other side.
Right.
Okay. That being said, I think because I'm pretty conservative, and a lot of I know a lot of people who were in the business during that time when it was crashing, in 08 or even other market crashes prior to that. I feel like I'm pretty cautious about what I'm doing today, because nobody's got a crystal ball. None of us know what the market's going to do in the next 3 years, or if there's going to be another market crash. There's lots of speculation on both sides. Lots of people saying it's going to crash. Lots of people saying it's going to go up. Lots of people saying, what I personally think, I think that we're going to see the market soften. I think that as interest rates go up, demand is going to slow, and everything about this market going up the way it has been all based on a lack of inventory and huge demand and low interest rates. So I think as interest rates rise, we're going to see demand slow, and we're going to see the market soften. I don't think we're going to see a big crash, but I could be wrong. I have no idea, right? My portfolio is, I bootstrapped the shit out of my portfolio. I would say I have 40 something doors today.
Wow.
And I have I think 6 mortgages. So the majority of my portfolio is free and clear.
Wow.
And so I don't have much debt at all. I think it's pretty rare. Most people have quite a bit of debt to build that size
That is very
portfolio.
rare.
I, again, started out living very, very frugally. Early on in my journey, I was living in a 2-bedroom house, paying $800 a month for rent. I was driving inexpensive cars. I still to this day wear a $100 watch. Like I am
Love
not
the G-Shock.
I am not a flashy guy,
Yeah.
and I've always lived well below my means. There was a point in time where I was making $1 million a year, and I was driving nobody knew it. I was a multi-millionaire in my early 30s, and no one had any idea because I was driving a Toyota Camry and living in an $800 a month builder grade house, like nothing special. And people would walk in and be like, "Don't you make a bunch of money? What are you doing here?" I'm like, yeah, I just lay low. I fly under the radar, and the money that I was making wasn't to go spend on luxury stuff. It was to continue to invest so that someday I could enjoy the luxury and the freedom, financial freedom. But I wanted to put myself as far ahead as possible. So I basically, as I was investing over the years, I would just make a bunch of money and I would go buy assets, okay? And as I started to accumulate assets that were free and clear, I started creating relationships with banks, and I started opening commercial lines of credit on either packages of homes or some of my multifamily properties. Right now I have multiple relationships with smaller local banks that I've got a couple $1 million in lines of credit that are just collateralized across, packages of homes and multifamily units that I own. And so what that means is they've got, take a package of homes. Let's say we got 5 or 10 houses in a package, and they give me $1 million, okay? And those houses are collateralized. They are pledged as the collateral for this line of credit. So the line of credit is just like cash. I can draw from it if I need it, or I can leave it all in the bank, okay? But it's just as easy as cash. I just transfer it into my account and I have $1 million to go spend. So if I come across a great opportunity, I can pull the trigger. I don't have to have my own cash. I don't have to go get a loan from a bank. I don't have to use hard money. I can use the lines of credit, and I pay almost nothing for those. I'm at prime plus 0, 3.25% interest. So very, very, gives me a lot of versatility and flexibility as far as having liquidity, but like I don't have to have my own cash in the bank. So that's been a really key thing for me.
Are those interest only?
Interest only.
Wow.
Yeah. And so I can draw it down. And so what I've done, the way that I've used those, I think I've been overly responsible with those lines because I'm very conservative and I don't want to screw up what I've built, right? So, and I see a lot of people do some kind of crazy and scary things with debt, especially if you have assets and they just want to leverage everything. And there's a time and place for leverage, but leverage can also be really dangerous if you misuse it. If you over leverage stuff and the market shifts, or you get jammed up and you have a big financial, catastrophe in your personal life or something, and you lose a bunch of money and you can't repay it, like you're losing those 10 homes.
Right.
The bank will take them, right? So I never want to put myself in that situation. So what I've done is I've used the line of credit strategically to go out and buy new assets. And then I will turn around as I'm generating a bunch of cash from my wholesale business, and I'll just pay off properties. I'll pay down the line, right? I'm not even paying off property because the property is free and clear. I'm just paying down the line back to 0. And I've just continued to do that over and over again. So to get back to your question about where we're at in the market is affecting me and my thoughts about debt and leverage.
You're straight. You're good.
I'm good. If the market crashed tomorrow, it wouldn't affect me at all. I wouldn't lose a night's sleep. Right. I still have tons of equity in all my stuff, my portfolio. I'd still be cash flow positive on everything, and I'd be fine. But what I'm doing right now, because I do think we are going to see some sort of financial shift in the economy in the next 1 to 3 years, I'm confident we will. Like, this can't last forever. Right? So, there's some people that say, like, it's just going to keep going. I'm like, that's what everyone was saying in 2006, man. That's literally why millions and millions of people lost their homes, because everyone was just buying houses thinking, like, this is just great. I just buy a house, I can sell it a year later and make $100,000. Like, that's not normal, right? And we're kind of back in that. So anyway, I don't know what it's going to look like, but I do think we're going to see something shift or soften or slow. I want to be prepared. What happens when there's a market shift and if it's any sort of financial downturn, right? No matter how big or small, is the banks inevitably will tighten up lending. They will stop lending as free. Like right now, the banks are lending like crazy. they will tighten up and pull back if the market shifts. And so it's easy to get money right now while the banks are lending. So I am right now, kind of for the first time in my life, I'm pulling out a large amount of equity out of my properties, and I'm just going to set it on the sidelines. I'm just going to have cash sitting and waiting, because if there's a shift in the market, my lines of credit could go away like that. The bank might shut those lines off, and they might not want to give me $1 million loan if there's some sort of shift in the market. So I just want to have the cash sitting aside. So I've hand selected some properties that I think I'm going to be holding very long term, and I'm going to pull out some cash and just have it sitting on the sidelines in case. Because in a financial downturn, if everything goes on sale, I want to be able to buy it all. You know what I mean? So that's kind of how I'm preparing right now. And you didn't ask about this, but another thing that I see a lot of people do when it comes to buy and hold is I see people buy property, like a couple mistakes I see people make. They go out with the goal of buying, like, I want to buy 1 or 2 rental properties. It's a mistake, right? And I'll tell you why. Rental properties start to make sense at about 5. I think that with a small number of rental properties, it can be more trouble than it's worth. So the goal should be to have a larger portfolio. For example, you have 1 or 2 or 3 properties, and let's say you get 1 bad tenant or 1 AC unit goes out. I mean, literally to replace an AC unit, you spend $5-6 grand. That's like what you might have netted the whole year for that rental, right? So it could wipe out a year's worth of profit. Like, what's the point? It's more trouble than it's worth at that point. But if you have 5 or 10 or 20 doors and 1 or 2 AC goes out, doesn't matter, because it's offset by the profitability across the rest of the portfolio. And so you'll still be net flow positive, right? So that's one thing, is think bigger, right? I tell people, like, just the goal should be to think bigger and have a bigger portfolio. But the other thing that I see people do is they'll buy rentals with these skinny margins, okay? I have kept properties, that my baseline is $500 a month. If it doesn't cash flow $500 a month, I'm not interested. And I look at a certain rate of return and cap rate and cash flow, on my, cash on cash return. But I want to see a minimum $500 a month, because if it's $100 a month, and just like the sales market can shift, the rental market can shift. If rents go down a little bit, you're breaking even or losing money, right? Yeah. So I want to see a minimum $500, so I have a little bit of cushion, and then it's actually worth my time. And I've kept properties in my portfolio that I could have wholesaled and made 100 grand on because of the bigger picture. Owning real estate is not only a great way to generate cash flow, but there's lots of other benefits. Being able to collateralize it and use debt strategically, right? To accelerate and give yourself more ability to buy more properties down the line. Also, there are incredible tax saving strategies. I do a cost segregation on every single rental property that I own, which is basically a study that I hire a company to do where they accelerate the depreciation. And instead of taking a little bit of depreciation over a 27-year period, they accelerate it over 5. And I get a huge tax saving this year, which is really beneficial. That's awesome. So there's a few different things that I do with the rentals.
Amazing, man. Yeah. When you were talking about, being cash heavy when markets do change, that's one Warren Buffett's favorite strategy, and he talks about this all the time. And I think it's definitely very true, especially because we're living in a time where there's a big shift happening in the country, in the economy globally, where money is being circulated a lot faster, and I think that contributes to the demand and supply issue that we have, along with amongst other things. But being cash ready, I think a lot of people are missing this point because they're going out and deploying this cash, whether it's luxury things or buying things that aren't necessarily our assets, but they are just putting that money out there. Even single family homes, like, and buyers or the majority of the public right now, when they're buying properties, they're not over leveraging the banks. They're over leveraging their pockets, and some of them are coming out of pocket to pay for to beat out the other offer, especially like in a market where we are right now. I've gotten, last year, I can't even think of a single time where I got a buyer to actually get a deal that's at asking price. It was always, we're competing, we're fighting, and people had to leverage their pocket. I had a guy who paid $160,000 more than what he wanted, but after renovation and refinancing, it made sense, right? And he probably is side up now because market has appreciated so much. So it's very refreshing to hear your insight on that, because a lot of people are not thinking that. They're thinking, hey, leverage all the equity, that majority of the equity that I have now, offset it with the payment that I'm getting, and that's my cash flow, and just let it accumulate. If the market goes down 20, 30, 20, 10, 20%, which, some people say that won't happen. Some people say it will. They feel like they're protected. But I think your strategy to leverage those banks to get the line of credits is brilliant, man. One of my goals this year is also to acquire more rental properties to add to my portfolio. I bought my first one beginning of last year, and a bit of an issue with the tenants. CDC kind of kicked back my writ of restitution. It's actually on ABC 15 right now. I'm on the news for it, which is great. But they're claiming I had 4 failed evictions, which is not true. I dismissed 3 of them because of a lot of jury trial. I got a jury trial for an eviction because that's what the other party is requesting, and that's legal within their rights. But property is perfect. It's my first rental. It's got quite a bit of equity. It's appreciated quite a bit. I'm not cash flowing from it right now, but here's my goal, and I want you to tell me what you think about this. Acquire properties from now until I am 30 years old, which is about 6 years from now, and continue to add properties to my portfolio, but not touch the cash flow. Keep it circulating back, right? So you'd have this sort of a staircase set up, and my first property, second property, third property, and so on. Now each property is going to spill down until the bottom one gets filled, and then they all eventually get filled. And there's a lot of power in just calculating, like an extra $100 on a mortgage goes a long way, and timing that correctly and making your calculations, you can pay off your properties a lot faster, but also generate a lot more equity with that. Plus all the tax benefits and all the benefits coming from owning real estate. Somebody said this to me one time, and it kind of clicked for me how it clicked for you. And he said, hey, you're richer than you've ever been. Somebody said that successful people don't have jobs, they have assets, right? And America doesn't tax assets the same way they tax income. So for me, it's like, that did make sense. But now that I understand income brackets and how income is taxed, it's like, holy shit.
Yeah, my capital gains on my portfolio, the tax that I pay on my passive income is almost half of what I pay on my active income.
It's insane.
Yeah. But so to clarify your question, are you talking about, when you say not touch the rental income,
yes,
are you talking about just like letting it accumulate in like its own account and not spending it? Or are you talking about paying down additional principal on the mortgage?
Yes.
Interesting. So, and you're planning on paying down additional principal?
Yes.
I would go that. I see. Now I'm going to go a different direction.
Okay.
Earlier I mentioned that my number 1 rule for wealth building is to live below your means. Mm-hmm. Number 2, right, aside from investing in assets, is to not touch the cash flow. Okay. Now, so when I bought that first rental in Maryville, I had a separate entity, I had an entity, just a LLC, a holding company for that property, and it had its own bank account, and I never once took money out of that bank account for anything personal or business related. Any money in that account just continued to accumulate and went toward servicing, repairs on that property, or paying insurance or property taxes or whatever, right? And then the only thing I've ever spent money, with the exception of maybe a couple of scenarios over the years where I just like needed money, so I tapped into my rental holding bank accounts, I've just continued to as I've acquired more assets, I've continued to let the cash flow from all those rentals collectively just accumulate. And then I've reinvested it into new assets. So I will use that money for renovations or for buying new properties, or just continue to reinvest it. It's the law of compound interest, compounding interest. Okay, it's gonna over time, as I acquire more assets, there's going to be more and more passive income, which I'm going to then use to reinvest into new assets, which is going to, again, help me grow that passive income stream. And at some point, I'll get to a point where, okay, my active income is here, my passive income is here, it continues to grow as I invest. At some point, it will surpass my active income. And then I won't even need to wholesale and flip properties. I can do that if I want to for fun, because I enjoy it, but not because I need to in order to keep the lights on. I can just reinvest money from the rental properties to buy new assets. And just be a buyer.
Some people would say the opposite too. Is like, hey, your income should be your investment money, and your passive income should be your living expense.
Yeah, but the goal is at the end of it all for the passive income to be everything.
Right.
It's like you kind of want to build your cash machine so big that it's generating so much that it's like money's
So
not.
I've gotten to the point recently where as I start to look at, once you start generating a lot of money and income and cash flow and all these different things, managing money becomes its own job, right? And so I've sat down looking at my portfolio and the net proceeds of my cash flow and where all the money's going, my expense load on my rentals, how much I'm paying in debt, how much I'm paying for property management, all these different things, right? And what I'm actually netting. So I know what the gross income is across my portfolio on a monthly basis. I know what the net income is after the expense load and property managers and debt and all the repairs and stuff, right?
Right.
And then there's also, like I call it net, like if I'm setting aside taxes, right, to pay at the end of the year, how much is left over at the end of the year after all that? I want to get to the point where there's also a net number after I'm paying myself a salary to live on from that income stream. Because I will get to a point where it'll grow to a certain level where I can pay myself 20, 30 grand a month. I can do kind of whatever I want on 20, 30 grand a month, right? But there's still enough in there to cover the expense load, the property management, the taxes, insurance, debt, and have money left over to continue to reinvest, right? That's the goal. That's true financial freedom, because at that point, I don't have to work. I'm still getting that salary, like a generous salary every month gets deposited automatically into my account, but then it's still covering all the expenses, and there's still money left over to continue to reinvest. But anyway, to come back to your question of paying down additional principal, I would say not to do that, but I would have to have more information to really give you my full opinion. Like what kind of debt is it? Are you paying, is it hard money? Is it interest only? Is it a fully amortized 30-year fixed loan with 3.5% interest, right? Depending on the terms of that debt. If you're in a traditional conventional loan with 30-year fixed debt.
That's probably not a good idea.
Is it fixed debt for 30 years?
Yeah.
Okay, what's your interest rate?
I think it's a 3.2.
See, that's a great rate, dude. That's like almost free money, right? 3.2 is pretty close to zero.
But isn't it that I want to, my first 5 years, if I understand this correctly, majority of my payment would go to my interest.
Yeah, but here's how I think of it, okay? Would you rather have a little bit of money 30 years from now or the money right now?
I mean, the money now.
Now, right?
Yeah.
So like that's why I do a cost segregation. A cost segregation study on a rental property, I don't get a little bit of depreciation over 27 years. I get a bunch of it right now. And so different scenario, but similar thought process. Do I want to save a little bit of money? Do I want to save money on the back end of this loan decades from now? Or do I want to put that money to work today? Because ultimately, let's say whether it's $100 or $1,000 a month, right? Extra that you would be paying toward your principal, you can either pay it toward the principal and give it to the bank, right? And then you lose the use of that cash today,
right,
but you save on the back end,
right?
Right? You pay less interest, you will. But if you just make your minimum monthly payment, right, whatever that payment amount is, and you continue to strategically put that money to work today, I think the benefit of investing it today outweighs the benefit of saving on the back end. That's my personal opinion.
And I've got a question for you. So let's say like wholesalers that are out there, they're doing deals, right? They've got 0 rental properties. Like, what would you advise, like someone like in today's market, like how much money should they have set aside when they start playing that rental game, right? Because we know like the first 5 rentals, like you're talking about, it doesn't make sense. Like, when do you keep investing in your wholesale business, and when do you make that switch? 50,000, 100,000, you know what I mean? Like, when would you recommend someone to jump
A lot of
into
people
that?
struggle with this.
To jump in and start buying rentals?
And start buying rentals, right?
So that's a great question. Anytime, as long as the numbers on the property work, right? I don't know that there's a set dollar amount. I mean, you heard my story. Like, I put everything I had into the first one. I didn't have a lot. I had like 20, 30 grand saved up, and I put it all in this one property, right? With the understanding that I was then going to have to hustle and make more money to keep money in the bank account and, do other things and buy the next one, right? So I don't know that there's necessarily like a dollar amount threshold that someone should have before they feel secure in doing it. I think if you come across a great opportunity and the numbers work, pull the trigger and figure the rest out.
Nice.
Right?
So look for the deal and make sure you can afford that deal.
Yeah.
If you can afford that deal, boom.
Yeah, exactly. But I would say that, be overly conservative when analyzing those numbers. I think, it happens with fix and flippers, it happens with buy and hold people. People are overly optimistic when they underwrite a deal and they do like these mental gymnastics to try and make it work,
Yeah.
versus like looking at the reality and going, no, the fix up on this is 35, it's not 20, right? Like, it needs a roof. The roof is fucked and you gotta do the full interior and this and that, right? Be realistic and honest with yourself about what the property needs, what it will actually rent for. When I underwrite deals, I'm extremely conservative. Mm-hmm. Most of my portfolio, if you look at, especially my buy and hold stuff, the numbers are like extraordinarily good. The returns I get are insane. And the reason is I'm so conservative on the front end when I underwrite it. I will look at it and go, okay, the rehab's gonna cost me 40, but then like I'll end up getting it done for 32, because I'll figure out how to cut costs, or I'll just I'll go, well, actually the kitchen's okay, we can paint these cabinets, we don't need to replace the whole thing, and I just saved $7,000, right? I also will, if I think it'll rent for, 16 to 1900, I'm gonna underwrite it at like 1650. Like I'm gonna assume that the lower end of that range is what's actually gonna take place, but then if I rent it for 1900, it's like a bonus, Do the same thing on fix and flips. So being conservative on your underwriting can really kind of save you some headache on the back end. Because if the deal only works in a best case scenario on all fronts, then like everything has to go perfectly for that deal to work. And that's just not likely. It's just, you know what I'm saying? More often than not, there's gonna be a problem somewhere or an added expense that was unexpected or like some issue. So you just wanna be conservative and realistic about what it's gonna cost.
So that's kind of like the test from the universe, because what it sounds like is like the wholesale deal that you'd make the fattest check on, that's the one that you should take your savings and boom, like buy, right? So that's kind of like,
dude, I'm telling you,
passage.
I have a lot of properties in my portfolio that I would have made an insane amount of money on a wholesale deal, but I kept them because for me, I always am thinking about the bigger picture, right? Making $100,000 on one deal in one day is super exciting. It's really sexy, Not making it anything and instead making, spending 40 grand and then making $500 a month, not as sexy, not as exhilarating. But it's that delayed gratification that I talked about earlier on, and having kind of like the vision to know and recognize what you really want long term. And that $100,000 is great, and that will change someone's life. So I totally get the pull to do that. And if you're in a position to bypass that, I would encourage people to consider keeping some deals in their portfolio, of course, if they make sense, because long term, you're going to have more benefits from owning the asset than the short-term gain of the $100,000. Like if you sell a property, you're going to pay personal income tax on that deal, and I don't know, my personal income tax bracket is 40%, so it's not $100,000.
Right.
It's 60 at the end of the year,
right. You got a partner.
Yeah.
With Sam.
And and so it's like, I would much rather do a cost segregation and put it in my portfolio and add that same $100,000 that I would have made in liquid cash that day. I'm still making it. Mm-hmm. I'm just not making it in liquid cash that day. It's added to my balance sheet on my net worth. Mm-hmm. And then I'm also going to capture the appreciation because over the last 3 years. Like my net worth has doubled over the last 2-3 years just because of all the appreciation from this insane real estate market. I don't take credit for that. It's like whatever. I get it. It's exciting, but I don't get too caught up in that number because it can go down just as fast. What I care about and what I focus on is the cash flow, and the long-term potential of owning the assets. I'm paying, if anything I do have debt on, every check that I cut to the bank, I'm not just paying the mortgage for that month. I'm cutting myself a check in terms of equity because I'm paying down some amount of principal too. So anyway.
Absolutely. No, I love that we're talking about this because I hear a lot of wholesalers, really struggle to get out of that mindset of not making the check now, instead turning that back as whether it's spending it on their business or spending it on an asset, because people have a hard time seeing the bigger picture, right? Would you agree that the most essential skill to have as an investor, as a wholesaler, as an agent, is your ability to recognize, first of all, comp and recognize opportunities when it comes to properties, right? You probably, before you bought your rentals, even today, you're probably looking through a long list of deals, comping a lot of different properties until you find the one that makes sense to go ahead and jump on that. Would you agree that comping is essential?
Comping is essential. Ability to recognize the opportunity when it's in front of you is essential, but I don't think that's the most important.
Okay.
I think the most important is the ability to execute, right? And whether that just be to remain non-emotional about it and just be realistic and pragmatic about those numbers and actually pull the trigger, because it's a scary thing. I mean, I talk about my mindset thinking like I'm giving up all my liquid cash on that first deal and I'm totally broke now. Like I actually thought like I'm giving up everything. But understanding the emotional side of it and being able to control that and understand like I'm investing in this and this is the right thing, right? It can be scary because you don't know if it's going to work out, but whether it be that or just the ability to put all the pieces together, pulling the cash together, the crews for the construction, whatever the logistics of pulling that deal off, I think the ability to execute is the most important.
Awesome. Yeah, exactly. I want to tap into kind of the JR Piper today, right? What's the status of your operation? I've heard a lot of it from Rich, but I kind of want to hear your side of it. And where are you headed? What's next for you?
Yeah, so I have been more or less a solo operator over the last decade. When I started, I worked with these guys. I still I actually own some real estate with both of those guys today. Some of the bigger commercial stuff we're partners on. But I branched off and did my own thing, within a couple of years of starting. And I did everything myself for a number of years. Once I started getting really busy and understanding the mechanics of the marketing and, started doing more volume, I needed some assistance with fielding the calls and handling the administrative side of paperwork and just keeping my records clean and everything. So I've got an accountant and a bookkeeper, which are both key components of my business and anyone's business. I think you need a good bookkeeper and a good accountant. You should always have a good real estate attorney relationship. In office, I had one assistant for a number of years where I just had her basically do either leads manager type tasks or administrative stuff or a combination of both. Today, I've got an operations manager, which is more or less like my dispositions manager and executive assistant. She does a variety of things for me. She sells all of our wholesale deals. She deals with property management, which I have a property manager in place now on my portfolio too. I used to self-manage all my rentals. I don't do that anymore, so I'm no longer taking the calls. But she kind of deals with the property management company. She handles all the administrative stuff in office. She manages the title and escrow. I've got one acquisitions that is in office right now, and then I've actually got 5 new guys starting in the next 3 weeks. So I'm actually, it's like right this moment, I'm actually ramping up and hiring a bunch of people.
Let's go.
I have always been very, very intentional about keeping the business small and not having a big staff to manage. I have not wanted that in my life, or that responsibility. I've done very well. A lot of people, like I hear people say that they're just starting in real estate and they're like hiring VAs and hiring like a leads manager and doing all this stuff. And I'm just like, I hear that stuff. I'm just like, it's crazy. I think it's crazy. When you're starting out, you don't need people. In fact, I actually think it puts you at a disadvantage, right? Because when you do, first of all, you can't teach someone to do something at a highly proficient level unless you've done it and mastered it yourself first, right? So I think by doing it yourself for some time does 2 things. One, it gives you the experience and knowledge that you are going to encounter every situation you could possibly encounter in that role with that specific task. And then when you eventually want to delegate that to someone else, you're going to be able to answer all their questions and guide them and coach them on how to do it properly because you've already done it all and encountered everything you could encounter, right? So it gives you the proper experience and knowledge base. But number 2, it helps you keep your costs low. I see people starting out spending money on all kinds of things, and it's like people want to go out and hire like a whole staff, which there's nothing wrong with scaling up quickly if that's what you're trying to do. For me, it worked out really well to stay small, and it made me incredibly profitable. I am extremely calculated in my business. At the end of the day, there's 2 ways to make more money. One is to generate more revenue, and the other is to cut costs. And so I am constantly trying to cut costs and keep overhead really, really low. And because of that, and because I've been a small operation, I have seen extreme profitability every year I've been in business. Whereas guys who have a team, with a lot more mouths to feed, we might generate the same, let's say we generate the same amount of revenue, right? Or even they generate twice as much as me, but I net twice as much as a lot of my competition because I have so little overhead that my net margins are so high, right? So being a small operation has benefited me in a lot of ways, but the downside is that when I go and I travel the world, everything stops, right? There's no one taking those calls when I'm in Bali, right? My phone's not ringing over there.
Right.
And also, I work a ton of hours and I have to be, driving across town on a Sunday when I want to just be chilling at home and enjoying my weekend and recharging for the week, right? So there's some pros and cons to both. But where I'm at right now and where I want to go, I'm scaling up, I'm hiring people for a couple of reasons. One, I love what I do and I enjoy negotiating with sellers and being involved in the deals. But at this point in my life and my business and just my trajectory in general, I don't want to continue to be in those appointments and in every deal. I want to spend my time doing higher level things and working on the business as opposed to in it. But also I have some new goals that I've set for myself for this year that are pretty freaking lofty, and it's going to be impossible to do just all on my own. It would take way longer to do it on my own. So I recognize if I can build a team, I can get Phoenix on autopilot a little bit so that I don't have to be involved in every deal. And then my team can help me do what I want to do in another part of the country, which basically is I'm going to go into another market. I'm going to go in hard. I'm researching a few different markets right now. I'm not going to say which. There's a few markets I'm researching very intently, and I'm going to go and buy 100 houses and turn them into either rentals or seller finance notes or a combination of both, most likely. Because I'm still buying rentals in Phoenix market today, but I'm spending, we were just talking about this before the show, I'm spending $200,000-300 grand to buy a single property here that then rents for 1% of the sales price in the best case scenario, right? And I'll do that deal, but it's a lot of cash that I gotta have on hand to do that deal, right? And at the end of the day, the return, I'm totally fine with that return, I'll take it. But I think there are just other opportunities in some of these other markets where I can buy something for literally a fraction of the cash because it's just a much lower price point in different parts of the country. And then it'll rent for 2% of the sales price. So it's like, It's a lot less cash out of pocket. It's a much higher yield on the investment. For me, mathematically, it's a no-brainer. I just need to set up the model and go out and execute.
Well, diversifying you too, right? Because you're not going to get the appreciation on those other ones, but the cash flow is a lot.
Well, see, here's the thing. So part of my research is going into spending time figuring out where I think the appreciation will occur. Because there are places in the country where if you time it right and you go in hot and heavy and you buy a bunch of houses at just the right time, then the market goes up in the next year. Now, I don't know if I'm going to get it right, right? Ideally, like that's what I'm shooting for. And that's part of the research that I'm doing is like, I want to go in at a very precise time in that specific market and buy in certain areas where I think that they're going to see an increase in value. So it's probably...
You're trying to get the best of both worlds.
I'm trying to get both. Mm-hmm.
That's right. Well, hey, your track record, you've been pretty good at picking them so far, so...
Yeah. Yeah,
awesome.
I appreciate that. I'm very analytical, my personality. So the amount of time that I spend researching this stuff and kind of trying to figure it out and put the pieces together, like I don't think I'm going to miss, but we'll see. Worst case scenario, I don't get the appreciation, but I get the cash flow, Nice. So I think it'll work out either way, but ideally I'd love to get both. So we'll see.
What has you going more towards the single family route instead of doing multifamily in these markets that you're doing? Or are you just looking for both?
So I'll buy multifamily, but it's a little bit different process. Multifamily, it's a different type of team. I personally love multifamily and I love the idea of buying big 200 unit buildings. I own some smaller multifamily stuff. And if you look like at my properties across the board, my small multifamily, the returns on those are like insane. They're way better than my single family houses for the most part. So I love the idea of going out and buying some 200-300 unit buildings, but it's a couple things. One, it's a lot more cash, right? I probably have to bring in partners, which I just don't want to have partners. I want to do it myself, right? And I also, the process is different. And for where the market is right now, multifamily is just so hot. It's so inflated. It's so hard to get a good cap rate on anything right now. So, but houses, I'm just sort of looking and going like, this is just like, I feel like this is just sort of an untapped resource that if I go into certain markets, it's gonna crush. So
I agree 100%. There are a few key markets where, whether it's the population size, whether that's new plans, new projects, new whatever is going on. I think that the majority of the markets are being pressured by both institutional buyers and a lot of wholesalers, right? A lot of listings aren't hitting the market because wholesalers are picking them up. And there is a lot of competition in major markets here on the West Coast, the Midwest, and the East Coast, and it's happening all over the country. It's the simple economics of supply and demand, and that is for you. You're looking at the data. You're looking at the opportunities based on data, which can reflect it can tell a lot about a market. I love what you're doing with expanding and growing your operation. And I think the way I'm seeing it is I see you with a limited amount of hours daily. And then I see you adding 5 people. Now you just 5x'd your time because now you have, let's say, 8 to 9 to 12 hours a day from each individual person. Now you have, 200 hours a day that you can allocate through different things in your business. And the sky is the limit from there. It's the money versus time exchange, and you're able to take back that time and do the things that you want. Go out after projects that you do want to incur, or go into different markets.
Yeah.
So,
and I think the other thing that's exciting to me about it is I've been really, really fortunate. I've worked really hard to get to where I'm at, but I've been really fortunate to have some really great mentors in my life early on when I was, first getting involved in the business and along the way. And I've been blessed with financial success and financial freedom. I don't really need to continue working at this point. Like I could live off of my portfolio at this point if I wanted to retire today, which I did consider. But I think I would get bored. I think I would spend 6 months traveling, and then I would be like, all right, I need to do something. I need to be productive and like achieve something. I need a challenge. I need something to fulfill me and kind of scratch that entrepreneurial itch, you know? So I think it would just be a matter of time before I was back in the office anyway. So I went the opposite direction. I said, well, let's scale up, and not only can I take my business and my, financials to a whole different level, but I can also start creating some really great opportunities for some guys that want to come and work on my team and work with me and help me build this thing, for them to make a shitload of money. And possibly there's some opportunities in the future to like get involved in some of these deals as a principal. And that's like my vision would be that once we open this other market and we're buying a ton of houses, I want to be able to have partnership opportunities for staff where I can not only help them earn a good living through their salary or their commissions or whatever, you know what I'm saying, like their job, but help them to start to build their balance sheet and their passive income stream and create financial freedom for them and their families as well. I think that can be a really cool and fulfilling thing to do also.
Amazing.
Awesome.
Give a way for me to give back over time. And yeah.
I love that you say that. I used to do this with my first-time buyers a lot. I would kind of give them a quick overview, and I had some visuals that I was making, just some charts, and showing them, hey, let's say you bought your first primary, right? In a year, you're allowed to move out and rent it. Now you go buy a second primary. Now, let's say in 2 years you saved up enough for a down payment on a third or second, technically be a third rental property. Now 2 years later, you got another property, and 2 years later. So in 5 years, in 10 years, you'd have 5 properties. In 20 years, you'd have 10. Then you'd be able to leverage that. And that is exactly how you build wealth in real estate. So it was so fulfilling for me to teach that. And I had one kid who was 22. He was an engineer at Intel. He listened to me, took the money that he was making, bought his first primary. And when he bought his first primary, like a year later, when he flipped that into a rental, he had so much equity, he bought 2 more properties. And with those 2 more properties, he bought a second primary. Now he had 4 properties, and I think today he's got up to 8 properties.
It's fantastic.
And he's only 25, 26.
Yeah.
I mean, making money and succeeding is cool, but like when you help someone else, like it's different. You know what I mean? Especially like you coming from the bottom, and honestly, like I think that was probably like one of the greatest blessings that could happen is you hitting that wall of like the fast life, chasing pleasure, right? Because like any sort of like drugs and alcohol is either like avoiding pain or just going for like the straight pleasure. But it's like I almost feel like that was like your boot camp where you played that movie of like chasing that short-term thing so many times. Same with me, you know what I mean? Banging my head in the wall over and over. It's just like I'm done. Like, I can't do it. And then it was like your discipline from overcoming that, I think, catapulted you in this. Because, like, dude, I remember you saying you're driving the Toyota Camry. Like, you finally broke down and got, like, a Tesla and everything, right? And, like, dude, you could have bought that a long, long time ago, right? And it's so funny because, like, a wholesaler will, like, make their first $100,000 check and buy $80,000 car.
First thing they do.
You know what I mean?
Absolutely. Yeah.
And hey, if you earn the money, spend it however you want. But I just love like what you're teaching because I hear it from Grant Cardone and all these people like your earned income. Don't spend that.
Yep.
It's all about get rid of it, put it in assets, and build your money making machine.
Yeah.
And dude, I'm inspired, bro.
The biggest-
Appreciate it.
There's a great book
Absolutely.
about that called The Millionaire Fast Lane by a guy named MJ DeMarco. And this book, I read this. This was like one of the books I read early on in my journey that like changed my life because it shifted my whole perspective and outlook on money and financials and like how I lived my life, right? And it was right up there, like Rich Dad, Poor Dad changed my life. Millionaire Fast Lane by MJ DeMarco was another book that just totally changed my life. And he talks about like the instant gratification of buying the expensive car when you have money or buying the Rolex, but instead like delaying that gratification, sacrificing living below your means and giving yourself the ability then to have excess cash to invest so that you can then one day live like a baller and it doesn't affect you financially, because there's a time and place for that, but people want to do it way too early. My thing has just always been, I'd rather be rich than look rich. I don't care. You know what I mean? Like, I don't need to look like a big shot. I'd rather have money in my bank and assets that are going to pay me passively than like look like a badass, you know? Like, I just don't care. I slummed it for years, even after I could afford the nice car. Like you said, I bought a Tesla a couple years ago, and like, I love it. But dude, when I made that purchase, and I struggled to make that purchase because it was not a cheap car, you know? For me to spend that amount of money, it was like, I could have bought another rental. You know, it's like, am I making the right decision? But ultimately, making that purchase, even though it was a big financial purchase, it did not put a dent in my net worth or my balance sheet. Like, it didn't affect me financially at all. And I think that's the only way to buy like luxury things, is where it doesn't affect you financially. You don't feel like this, like, you know what I'm saying? It doesn't hurt you. Because then you're really like practicing what you preach. You're just like living below your means, and at the time you can afford it, you're actually going out and getting it. So, I think it's crucial. A lot of people don't follow that, but
It's awesome, man. It's hard for people to see the bigger picture because it's not sexy. What your model is not sexy. Sexy now because market has appreciated quite a bit, but also your P&Ls reflect that, or your sheets, but the cash flow is just super important. And I think that people at a high level really understand this well because they understand the power of assets, from both the tax benefits but also the wealth building. But people that are coming up making money right off the bat, they're not thinking about that. They're thinking about right now, what am I doing? What am I buying? And who will I impress? But the reality is, the ones that are successful are not going to be impressed by the things that you do have, that you worked your butt off to get. They're actually going to probably look at you and say, wow, he could have bought a few assets with those.
Oh, that's cute. Look, he bought some stuff. That's cool.
Yeah. And that's man, what an incredible journey. Dude. What an awesome story. We greatly appreciate all the gems that you've dropped. I know that you live this every day, and this is your day-to-day, but a lot of us, are still gearing up to take on bigger tasks, bigger endeavors. And I wanted to thank you for coming out here and sharing your journey and sharing your story with us. How can people contact you, reach out to you? I know you're under the radar kind of guy. If somebody who's wholesaling here in the Valley maybe has a rental, maybe unit 41 for you, how can they get a hold of you? Where can they find you?
Sure. I'm on social media. I'm on Facebook and Instagram. On Facebook, you can find me under JR Piper, or my full name, Jared Ryan Piper. And then on Instagram, my handle is PipeDog84, and that's my high school nickname, Pipe Dog. And dog is spelled DAWG, so Pipe Dog, PIPE DAWG 84.
I love it.
On Insta. Yeah.
Love it, man.
All right. Well, there you have it, guys. Thank you so much for tapping into the RI Live podcast here in my beautiful home. And Mr. Jared Piper, thank you so much for coming out here.
My pleasure. Thanks for having me, guys.
It's been a pleasure, man.
Yeah. Peace out. Thank you, guys.